Welcome class. This is question 4, April 2022 sitting for CPA students. CPA, but of course it can be done by CFA, CS, university students, diploma students. It can apply all over. And these are very good question on analyzing financial statements, basically ratios. So it's a question on ratios, and you're going to see quite a number of ratios as required by the examiner. And see, these are some of the ratios that the examiner wanted us to compute for these two companies. So, go straight to the question. Green traders and gold traders are two businesses dealing with the sale of household furniture. The following financial statements were extracted from their books for the year ended at 1st December. You can see sales, those are sales, less cost of sales, opening, purchases, closing inventory, you have gross profit. Then you have less expenses, there, good, net profit for the year, statement of financial position, those are the summaries, assume a 365-day period. So you are required to compute the following ratios for each of the companies. So those are the ratios. Comment on profitability of the company, and that is so these are 10 marks, 18. This means this one is 2 marks to make it 20 marks. So that's the question, and I think we straight away go to the solutions. So what I'll do, I'll come up with a table that will help us go through this very fast. Come up with a table, and then the table will be like that. Sorry, my lines might not be that accurate, but we'll have one company here. Here we'll have the what is required and the formula, and then here we'll have the first company and then the second company. So that's the approach I'll use. Green traders and gold traders. So we'll have green traders here, green traders, and then we'll have gold traders the other side, so that it makes very easy. It makes it very easy for us to work. So compute the following ratios for each of the company. Gross profit margin. So gross profit margin will have gross profit margin here, gross profit margin, then the formula. And the formula for gross profit margin is simply the gross profit over sales times 100. That is the formula. So we go to green traders, get the gross profit. Gross profit is in the trading account. This is our gross profit. So 600 over 3,000, just like that. This is the sales for green traders. So 600 over 3,000. So it will be 600 over 3,000 times 100. That gives us 600 over 3,000. Sorry, 600 over 3,000 times 100. That gives us 20%. And then the other side for gold traders, very simple, will be, this is net profit, sorry, it will be 600 over 1,800. 600 is the gross profit. You can see gross profit 600 over sales 1,800. So 600 over 1,800. 600 over 1,800 times 100. This will give us 600 divided by 1,800. Basically 33.3%. So then those are the answers. So we close. Unless if they wanted us to interpret, let's just see, look at the question. Required to compute the following ratios for each of the companies. So we are only required to compute. We have computed. That is 2 marks, 1 mark, 1 mark. Then the net profit margin. This is net profit margin, not set. Net profit margin. So we'll come here, do the net profit margin. Net profit margin. These are questions that I normally say this ratio analysis is a quick question, so long as you know the formulas. So make sure you understand this formula, and you need to understand the formula, not to cram them. So this is a net profit over sales times 100. So we already know the sales, so we can just fill in these blanks times 100, and this also 1,800 times 100. So let's just get the net profit for green and gold, then we'll be done. So net profit for green, net profit for the year, we have them here. Net profit. So net profit, to take them here, 120 and 150. 120 and 150. So that gives us 120 divided by 3,000 times 100. This gives us 4%. Then the other side is 150 divided by 1,800 times 100. That gives us 8.3%. 8.3%. That is it. That is the net profit margin. That is the net profit margin. So we have 120, 150. Yeah. So then let's go to the next one. The next one is now it is important. It is important for me to state here that if we will have been asked for the operating profit margin, then we'll have taken this figure here without the taxes. But net profit margin will work with this net profit for the year, that is after the taxes. Gross profit margin, this is the figure, 600. Operating profit margin, then we'll have worked with 240, that is before interest and taxes. So operating profit margin 240, net gross profit margin 600, net profit 120. That is after the taxes have been worked out. So thank you. Let's proceed. Okay, the third item was return on capital employed. Return on capital employed. Return on capital employed. And the formula for this return on capital employed is net profit over net capital employed. Net capital employed over net capital employed times 100 times 100. Net profit over net capital employed times 100. So we already have the net profits here. Net capital employed. Net capital employed, the formula is non-current asset plus current asset minus current liability, or the financed by section. So we'll simply come back here and take this. We've said it's a non-current asset. This is the value, plus current assets. Yeah, this plus this, we have 966. So 966 minus current liabilities. The current liabilities are this. This 306. So it will be 966 minus 306. That will give us 966 minus 306. This gives us 660. 660. Or alternatively, you can work with this, the finance by section. Simply get the total here. Finance by section. We said it's either you go the other way, non-current asset plus current assets minus current liabilities, or you simply go to the finance by section, and this will give you, yeah, you can see the total 600 plus 60. So this will give you 660. This will also give you 660. So this side, this will give you 3720. And I believe if you take this, the total is 24 minus what is the total here? 2070. This is 2130 plus that. We get 2400. So 2400 minus 2400 minus, this is I don't know what is happening here. So this is let me just go to, this is 720 plus 480, I will get 42. On this side, why is it not balancing? There should be a problem. Oh, this is 2070 plus this one is 2130. Yeah, I think the addition was wrong. 2070 plus this is 2130. If you add this, you'll get 4200, not 2400. 4200. So if you get 4200 minus 480, yeah, you'll get that 720. So it's either this is non-current assets plus current assets minus current liability. You still come back to that 720, or simply 3000 plus 720. These are the finance by section. This will give you that 720. So 660 times that 720. That's how we go about it. What I've said is simply net capital employed is equals to non-current assets plus current assets minus current liabilities, or the financed by section. And financed by section is equity plus long-term liability, which should give you the same answer. So in our case, you have 660 and that 720. So I'll come here and say 660, and this side you have that 720. Of course, the net profit remains the same, so that's how it will go. So this will be 120 divided by 660, that is 18%, and then the other side it will be 150 divided by that 720. This gives you 4%. So those are the answers that we have here. So let's move on. That is ROCE, return on capital employed. Go to number 4. Number 4 is ROA, return on assets. So return on assets. This is again net profit, but this time is over total assets. Total assets times 100. So net profit, this is 120 over. So we just get the total assets. For this one, I think this one has already been worked for us. This is plus that. So 966 and 4200. 966 and 4200. So 966, and this other side is 4200. Times 100 times 100. Just like that. Once you know the formula, it becomes very easy. 966, that is 12.42%, 12.4%. And this side it will be 150 divided by 4200. This gives you 3.57%. Like that, just like that. So total assets, how do we get total assets? Total assets is non-current assets plus current assets. Non-current assets plus current assets. So just go to the balance sheet, get the non-current assets plus current assets. That makes your total assets. And then of course net profit you get from the statement of income statement. Let's go to number 5. Number 5 is current ratio. Current ratio. This is simply current assets over current liabilities, and it's always expressed in a ratio. So that is just how it is. So you simply go back to the question and pick current assets over current liabilities. So what are the current assets? I've dirtified this piece of work, so let me just make it a little bit clean. Need to be responsible for my actions. I'm trying to make it clean. Okay, now that we already have a clean sheet, so this one is okay. So current assets. These are the totals for current assets, 408, and here it's 2130. Add this. This is the total for current assets, and then current liabilities. The total is this 306. The total is 480. Make sure you get it right. 06 and 480. So the first instance will be 408 divided by 306. 408 divided by 306. So this will be 408 divided by 306. Now what are you going to get? 408 divided by 306. Get 1.1333. That is the answer, 1.33. And it should be expressed in a ratio, so that's how it's supposed to be. 1.33 to 1. So just divide 408 divided by 306. But remember to put it 1.33 to 1, which means assets are 1.33 more times more than the liability, current liabilities. Current assets are more, 1.133 more. Current assets are 1.33 times more than current liabilities. Then on this other side we'll have 2130 divided by 2130 divided by 480. 2130, yeah, 2130 divided by 480. So this is 2130 divided by 480. That will give us 2130 divided by 480. This gives us 4.434. Let's call it 4.44. 4.44 to 1. So that is the current ratio. We are done with it. So we move to the next one. So move to the next one. The next one is assets turnover. Assets turnover. Assets turnover. So the formula for assets turnover is sales over total assets. Sales over total assets. And it measures basically the number of times that the assets are used to, convert the sales process. So sales over total assets. So we'll simply go back to the question, get the sales. Sales is 3,000, total assets I think was 966. So 3,000 divided by 966. So this is 3,000 divided by 966. 3,000 divided by 966, that gives us 3.1. So we can simply call 3 times, and then the other side will have the other side will be 1800 divided by 42. Trying to get the total assets. Total assets 4200. So 1800 divided by 4200. This will be 1800 divided by 4200. This will give us 1800 divided by 4200. That gives us 0.43 times. 0.43 times. So that becomes our asset turnover, the number of times. And then the next item is inventory turnover. Inventory turnover. So once you know the formula, it becomes very easy. Inventory turnover, and this formula, there's a way. Inventory turnover is cost of sales over the average stock. Average stock. Cost of sales over the average stock. Cost of sales over the average stock. And the average stock is basically opening stock plus closing stock. So cost of sales over average stock, and the average stock is opening stock plus closing stock. So cost of sales, let's go back here. Cost of sales is opening stock plus purchases minus closing stock. opening stock plus purchases minus closing stock. So this side is 24. So 24 over, this will be 24 cost of sales, 24 over opening stock plus closing stock. I think we had the figures here. We've already read them. Opening stock is 348, closing stock is 252. So 348 plus 252. 348 plus 252. 348 plus 252 divided by 2. So 348 plus 252 divided by 2. That is 300. So this is 24 divided by 300, which gives us 8 times inventory turnover. Turnover is the number of times, so it will be 8 times. And the same will also apply to the gold traders limited side. So sales is 18 and no, cost of sales. Now let's get all the figures once, because this is opening stock is 750 and closing inventory is 1170. So 750 and 1170. So we get 750, we get 1170, and then the cost of sales is 1,200. So 1,200, 1,200. This will be 1,200 over the opening stock. We've said the opening stock is 750 plus 1170. So 750 plus 1170 over 2. This will give us 1,200 over 750 plus 1170 divided by, 750 plus 1170, that gives us that, divided by 2, that is 960. So 1,200 divided by 960, 1.25. So this is 1.25 times. The inventory turnover for gold traders is 1.25 times, like that. Then we move, and you should know the interpretation of all these ratios. Very important that you know the interpretation of all these ratios. The next question you might be asked for the interpretation. So trade receivable days. Trade receivable days. Trade receivable days. So trade receivable days, the formula is the average. This is receivable, so it will be the average sales over, if we are talking about payables, then it will be average purchases, but this is receivable. Receivable has everything to do with sales and debtors, so it will be the average sales over credit sales over credit sales times 100. Trade receivable average sales over credit sales times 100. Average sales over credit sales. Okay, so trade receivable days, average sales. So this is average debtors. Average debtors over credit sales times 100. So we'll go for average debtors. Trade receivable in days. Average debtors is found in the statement of financial position. These accounts receivable. So we have 150. We'll have 150. That is 150 over credit sales. For these, for the green traders, I think the credit sales was 3,000. Let's just confirm. credit sales, all sales are on credit, 3,000. And this one is, so 3,000 divided by 3,000 times 100. So this gives you 150 divided by 3,000 times 100. That gives you 5, not times 100, because 100 is when we talk about trade receivable days, sorry, it's 365 times 365. We need to get the number of days. So 150 divided by 3,000, get 0.05 times 365 days. This gives us 18.25 days. 18.25 days. So you can simply talk of 18 days. Then the other side will have again the debtors, which is average debtors. We'll just work with the closing debtors. Accounts receivable. Where is accounts receivable? 600. 600 divided by 1,800 times 365. That will give us 600 divided by 1,800 times 365. This gives us 121 days. 121 days. So 121 days. So this side is 18 days. This side is 121 days. 121 days is 4 months average. 4 months repayment. Takes 4 months for the debtors to repay their debts. So like that, that's how we go about it. Average debtors over credit sales. So 150, just take the debtors for that year, 18.25. Then for the second year, 600 over 1,800. This is the credit sale times 365. You get the answer in this. Most of the turnover and efficiency ratios are in the answer, the units is in times. You can see turnover times ratios. These are ratios. You can see how we express the ratios. Then the profitability ratios, the first four are profitability. Almost by, we multiply by 100. So profitability multiplied by 100. For this liquidity, most of them are expressed in ratio form, and you can see how we express that. In turnover, you get the number of times. Then the again, still this is also on efficiency level. You get the answer in terms of days. Let's go I think the last one, trade payable days. Trade payable days. Trade payable days. This is this will be average creditors over credit purchases times 365. So simply go back up there and get the average creditors. Average creditors is creditors is accounts payable. So 186. This is 186 divided by the purchases. So purchases 2304. So 186 divided by 2304. 186 divided by 2304. 186 divided by 2304 times 365. So 186 divided by 2304 times 365. This gives us 29.47 days. 29.47 days. Never forget the units, very important. You have to capture the units. Then for the gold traders, we will have for gold traders we'll have accounts payable 330 divided by purchases 330 divided by 1620. 330 divided by 1620. So 330 divided by 1620 times 365, and we get 330 divided by 1620 times 365 to get 74.35 days. 74.35 days. 74.35 days. 330 divided by 1620. Let's just confirm those figures. The accounts payable 330 divided by credit purchases 1620. So 330 divided by 1620. Times 365. So this is 74.35 days. 74.35 days. Good. So we are done. That is what was expected of us. So we are done. Don't have any other question. Let's move to B. Comment on the profitability for each of the company. Comment on the profitability for each of the company. Profitability. This is 2 marks. So we are not going to spend a lot of time here. So let's just see what happens here. What happened? So gross profit. So gross profit green traders managed to convert only 20% of their sales to gross profit. So green traders managed to convert only 20% of their sales or revenue to gross profit, while the gold traders were able to convert 33.3% of their sales to gross profit. So green traders managed to convert only 20% of their sales to gross profit, while gold traders converted 33.3% of their sales to gross profit. What does that mean? That gold traders is doing well. Gold traders is doing well compared to the green traders. That is the first part. And since the question is on profitability, we'll move on also and explain the second part. The second part is that green traders managed to convert only 4% of their sales, total sales, to net profit. Managed to convert only 4% of their sales to net profit, while the gold traders were able to convert 8.3% of their sales to net profit. Again, this shows that gold traders is basically doing better than the green traders. So if we are to comment on the profitability of the two companies, gold traders is doing better than the green traders, especially in terms of converting the sales into gross profit and net profit respectively. So that is the comment, and it should be able to earn you the remaining 2 marks. Thank you. That's how we go about it. Questions on ratio analysis or analysis of financial statements are very easy, so long as you know the formula, and you must also know the units. If you don't know the units, they will be quite, you may not go far, because you can see how we are responding to this question. This is the number of times, the number of times, the number of days, ratio, percentage. So you need to know the formula and also get to know the unit that you are going to use after that. Very important also is how to interpret the answers that you get at the very end of every question. So thank you. Let's meet in the next question.